Good morning to everybody. Good morning to everybody who decided to participate in this live trading session. We're going to hear from Chris any minute now. He's taking a little bit of time, but before he appears with his wonderful presentation on today's trading activities, let me say a few words. As always, my name is Mikhail Onokhov, and I'm a client relationship manager at Admiral Markets. In essence, my job is to create the best possible trading environment for you. Here's my email, my Skype, my LinkedIn. I would cherish anybody who would like to add me as a connection. Today I wanted to talk to you a little bit about the fact that we're going to change the 5-minute pre-presentation I'm usually doing. And every time Chris is going to be doing live training sessions, I'm going to appear before him with a 3-minute speech on one interesting and amusement fact about investments, Forex, and various markets. We decided to call this bit Fun with Forex. And today we're going to start with a very peculiar thing. We're going to start with Rule 72. So today's fun fact for your amusement is Rule 72. It is also sometimes referred to as a Rule of 70 or even a Rule of 69. And despite what some of the naughtiest minds thought, this rule is a method to estimate how much time it's going to take to double your investment. It's not that difficult to calculate. All you have to do is divide 72 by the expected rate of return. If I wanted to give you an example, it will be something like this. If we want to double our investment and we estimate a 6% annual growth, it will take us 72 divided by 6, 12 years to double our initial investment. The earliest reference to the rule was made by Luca Pacioli, who was living from 1445 to 1514. Although in none of his books Luca ever made any effort to explain the rule. So the general consensus is that the rule predates Pacioli by some time. So if you're wondering how much of annual growth you have to demonstrate in order to double your investment in Forex with Admiral Markets, you can use rule number 72. We're going to be doing Fun with Forex bets every day now. If you would like to contribute a fun fact for everybody's amusement, you can always write me an email, find me on Skype or in LinkedIn. I will happily use your idea. Before Chris appears, I also wanted to talk to you about our educational program that we have launched in Admiral Markets. It's called Trading Camp. By this time, tens and tens of people have already been educated by Trading Camp and have been showing great results. All you have to do to get more information from Trading Camp is to email me at camp@admiralmarkets.com. I will tell you a little bit about the camp. Trading Camp is an educational program. It's a 3-week course, 3-week education course, and plus 1-week real market trading course. So in total, Trading Camp takes a little over 4 weeks. Every day you receive little assignments that are time-based and easily achievable in one day. In those days, you will learn the strategies, the basic strategies, advanced strategies. You'll learn how to use a trading platform. You'll learn how to use various indicators and charts. You will be able to track your performance by using Admiral Markets Custom Trading Tracker. You'll receive personal coaching from one of the Forex mentors we have working in Admiral Markets. You will also have a chance to participate in live seminars with professional Forex trading. Just 2 weeks ago, we had Ninat Karkes, also known as Tarantula, who answered to all the questions our Forex traders and Forex campers wanted to ask. And you're also going to be supplied by free literature as well. We have started the course a little longer than 3 weeks ago. And in 2 weeks, we will relaunch the course as Trading Camp 2.0. It's going to be a new and improved trading course, new and improved online learning facility. All you have to do to participate in the course, you have to write a short essay on your Forex aims. It has to be around 100, 200 words, and you also have to open a real account with a minimum deposit. So if you are from, say, Australia or South Africa, your minimum deposit can be as little as $10. If you're from UK or Ireland, for instance, it has to be 150 pounds. So we do have some variances between the minimum deposits available. But this is a sniff for everything you're going to get for your money's worth. This course will prepare you to face the real market in 3 weeks. By acquiring structured and everyday assignments, you will be able to rise your Forex game to a brand new level. So think about it. Trading camp at camp.admiralmarkets.com. If you want to be a part of this wonderful program, you have to email me with a short essay and make a small deposit. If you want to ask me any more questions on trading camp, or if you would like to contribute a fun fact to our fun with Forex, all you have to do is write me an email to mo@admiralmarkets.com. You can always find me on Skype, LinkedIn. You can also try to search me on Facebook. I sometimes accept invitations on Facebook as well. Before we start, and Chris has asked us to take a little bit of time as he's preparing with something very interesting, let me speak about one more very important thing. Because if you want to be a Forex trader, you have to be a person who trains quite a lot. You have to be a person who's well educated and well prepared for the Forex market. All of you came here for one reason and one reason only. All of you want to become great, successful, and profitable Forex traders. You want to understand the process better. You want to be successful. You're interested, you're intrigued, you want to become a Forex trader. Some of you are just interested. Some of you have some experience with Forex. Some of you trade regularly and have their fair share of losing trades. When you end up looking like this guy and winning trades, when you end up smiling and feeling like you're a world beater. Obviously, all of you want to be this guy rather than the previous guy. Both of them have a good suit on and a fancy watch, but only the second guy looks genuinely happy. He has closed a great trade and he's tasting victory. I bet it tastes very, very good too. And I bet all of you want to taste it every day, every hour, and every minute of every day. This is why you're here today, to learn from the best, to learn from Chris, to get better, to get ahead, to be just like this guy, or Chris for this matter. But what do you do to get there? Forex is not a walk in the park. To be successful in Forex, you must be able to swim with the sharks. All of you probably heard that sometimes stock traders are referred to as sharks. And swimming with the sharks is one hell of a job that requires courage, strength, and of course, plenty of training. So how do you train for a job like that without getting eaten? Well, there's a way. I will show you exactly how you can accomplish something as complicated as that. Look at this. You can put yourself in this kind of a situation. A shark is swimming right next to you. You can photograph it. You can even touch it. But you are in no danger because you're protected with a cage. If you think about Forex market, this kind of a cage has a name. You can put yourself in a situation when you can get first market experience with absolutely no risk. And this experience is called Admiral Markets demo account. Trading Forex requires a lot of practice. Look at this Forex setup. What does it remind you of? Tons of indicators, various buttons. You have to know what you're doing at all times. This reminds me of a cockpit of a plane. Look at this. We have the same amount of charts, numbers, digits. They're very similar. Admiral Markets will offer you a chance to know your equipment very well. Admiral Demo Account offers you MetaTrader, which is the most popular trading software in the world. And it is the most popular for a reason, because it is the best. It offers tons of features for both Forex rookies and professionals. It will be your wings. It will be your path to victory. So if you're thinking about becoming a trader, think of it as becoming a pilot, because you have to make split-second decisions, and your decisions must be correct. The pilot is responsible for the passengers. You will be responsible for your money. You are now a pilot of your own Forex career. Before a pilot is allowed to fly, he spends hours training on a flight simulator, which looks like this. The pilot gets familiar with all the features of the aircraft. They put themselves through a variety of different scenarios. So when the pilot is flying a plane in real time, they can make an instant decision. So a simulator just like this one, which is only available in flying schools and airports, it costs a lot of money. You can get your Forex simulator absolutely free. Now, if you want to do that, all you have to do is go to admiralmarkets.com and register a demo account. It will literally take you less than a minute to register it. It will be 100% risk-free, and it will be at no cost for you at all. Once you have it, you can trade currency pairs. You can trade commodities and CFDs. You will be able to experience full services Admiral Markets is prepared to offer. I'm very thrilled to tell you that the spread on all major pairs starts and ends at 1 pip. So if I didn't care to tell you about it right now, I'm pretty sure you wouldn't even notice it. So once the webinar is finished, once everything is done and dusted, go to admiralmarkets.com and register a demo account. It will give you a chance to experience full Forex experience at real market conditions with absolutely no risk. So I hope you enjoyed this presentation. My name is Mikhail Olakhov. I will now gladly pass the floor to Chris Svorcik, who will blow your minds away with his immaculate presentation on today's trading. Thank you very much, everybody. Welcome, Chris.
Thank you so much, Mikhail. First of all, I want to make sure that everyone can hear me because I'm in a bit different environment than usual. I'm actually in the Admiral Markets office in Vilnius right now, so that's very exciting for me. It's a nice view on a building here. So first of all, I want to check if you can hear me because this is a different microphone. It's a different computer as well, in fact, unattendedly, but unintentionally. I have my computer with me, but I logged in, and that caused with the other computer by accident, and that caused some delay here. So as Mikhail was nicely talking, I was trying to solve the situation. So everyone can hear me? Good, perfect. Well, let's take a look at the PowerPoint first of all and go through that. Now the reason why I'm here in the office is because I was going through a seminar yesterday at a university and showing some Forex related material for those who were interested, so that was fun. And today we will also have the same seminar in Kaunas, in fact, Lithuania as well. So that's why I'm here. And then tomorrow I'll be flying back to Dublin. Alrighty. Let me see if I can get the question box. You'll have to bear with me today a bit because I am a little bit tighter with the space on my screen. That's why I was trying to log in into two computers, but that didn't work out, unfortunately. Let's see. So I'm trying to open the queue. Vish, yes, indeed. Learning never ends, indeed. Absolutely. And Janina, that's great that you'll be there tonight. I'm looking forward. Alrighty. Well, we're going to start off with the usual PowerPoint. First of all, the risk disclaimer, of course, explaining that trading foreign exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thanks for your attention on that, as always. Once again, welcome to Admiral Markets here. My name is Chris. We're going to take a look at intraday trading. Tomorrow, by the way, we will not have a session because I will be in the plane, as you can imagine the reason. And then Thursday we'll be back, though, with 2 webinars, as always, in the evening as well, the educational webinar. We'll be taking a look at intraday trading, but still we'll be looking at defining the trend, looking for opportunity, filters, trigger, and the entry methodology. Make sure to check Admiral Markets in social media. And let's take a look at the Forex calendar first. I think we have NFP. You have to forgive me there because yesterday I wasn't really that involved because I was traveling and preparing for the seminar. But yes, we have I read somewhere that the non-farm payroll has been moved to today. And that has, of course, to do with the fact that we had it earlier, was canceled, right? And now has been moved because the budget deal has been reached, and Vish is indeed confirming that NFP is today. So with NFP days, it's often wise not to trade and use it as a good learning day. But if you do, then just mitigate your risk and be aware of the risks you're taking, or close the trade before 2 hours before NFP, for example. But in any case, be very well aware of that and the risk involved, okay? Otherwise, we also have unemployment rate 7.3 at the moment, and it's forecasted to be the same. So let's see. Always a potential volatility when NFP is there. Let's go to the charts. Now, here too, I'm going to have to forgive you. I have my usual charts actually with me, but due to a technical issue, I logged into the other computer, which I just wanted to use to see your questions. I logged in there first and couldn't log into my usual PC with charts. So this is basically, I quickly downloaded MT4, so there's, unfortunately, although I have things prepared on my other PC, I can't log in there and show that to you. So I'm going to go through this together with you, if you don't mind. The only thing I will do is quickly change some properties so that we have a bit more visual clearance and understanding. I'll just make these blue, maybe a bit lighter blue. Now, first of all, I think in general, while I'm making this more visual attractive for everyone, in general, I do think that were it not NFP, the market, for example, is offering some interesting setups on the New Zealand dollar, the Aussie dollar, pound odd, and maybe euro odd. Those were the ones that caught my eye in any case this morning. The odd and the New Zealand definitely showing a lot of strength in the market, and you can see a lot of momentum last week with the Aussie USD reaching 96.70, so almost hitting that 97 target. 97 is still a potential resistance zone where we could pause on the odd USD, and but after that, maybe if we break the 97.50, which is the 50 fib of the entire downside, then we can maybe see continuation up to 99, which is the 618 fib. All right. So I made this a bit better. I'm going to add my usual couple of indicators, as you know, which is the fractals. You can see how I do that. Fractals. I'll be adding the moving average. Now, for those of you who are new, this is not something I do every day. Don't be alarmed. Normally this is all ready, but it's an exception today. And I will add 34 EMA, maybe make that a bit green, in fact. And I will add one more, which is the 144 EMA, and then the Williams oscillator. Alrighty, 144 EMA close. Maybe make that a bit different color. And I'll choose this. Righty. So we're good to go. And I'll save the template so we don't have to do this for every chart. And then we're all good to go. Alrighty. Your dollar making a very strong move, of course, last week. And the weekly candle, or weekly chart, in fact, is showing a lot of bullish momentum. Right, very good close near the high. Let me zoom into that weekly candle. And you can see that the close was in fact just a few pips off the high. So the buyers definitely stepped in and took control and kept control throughout the week. What we could see now, just looking at the weekly candle, in fact, we can make an easy assessment by saying, okay, this is bullish momentum. We would maybe see a retracement of this weekly candle, but by no means should we break the last week's low. So that's a clear support level on the euro dollar that price should not go through. Otherwise, basically this euro dollar is not showing the strength that I expect it to show. So that's a clear line in the sand. 134.70 is not, price should not go below there. Otherwise, my bullish bias is definitely out of the window. All right. So any retrace above 134.70 could easily happen. Even this minor push down could already be enough. Although I personally doubt it, and the reason why is because we're just very near a major resistance. 137.11 or 10, 14, that area approximately is a top, as you can see, and it's been a top for a while. And not only is it a top, but it's also this year's 2013 high. And obviously, considering the fact that we're in October, a high that has been maintained for almost an entire year is very important. So when we approach that high, obviously it's a major resistance. Therefore, considering the fact that the candle just topped a few pips shy of that resistance, a respect for that level is likely, and we can see a retrace of the weekly candle, and then maybe see the buyers step in about halfway, maybe 135, 135.50, maybe 136 for that upside. Now, unfortunately, I can't draw here because I don't have my drawing tool, right? So I can't show you that the specifics where I'm talking about, but I hope you can follow like this. Let's see. Other than that, when we break 137, excuse me, the long term just quickly, we should then expect a move up to this trend line, at least up to 138.50, which is a target if you fib this move up. My fibs are also different. Well, doesn't matter. Just quickly change the color so you can see it. But there are targets here up at 138.50. Maybe we can switch it around like this. And there's a 786 in any case, or a 618. All right, 618 fib of the entire down move here, you can imagine, is always a resistance spot. If we break that, 140, 142, maybe even up to 145, which is this trend line here, make it a bit darker and deeper, thicker so that you can see it better. But that would be the long-term, basically the long-term targets once we break 137. All right, so that's not confirmed yet, but if we do break above 137, some prolonged and extended moves up after retracements and pullbacks, of course, on the 4-hour chart is definitely possible. So anyhow, back to more reality, because that's very long-term. Back to our 4-hour charts. You can see the break we had last week out of this correction to the downside that couldn't break the 144 EMA moving average, indicated by these dotted orange lines, right? We had a very impulsive move up on the 1-hour chart. Look at this, very strong. Look at the awesome oscillator and the power it's showing. A break of that top, therefore, in my opinion, is very likely. Usually the top does get broken if the AO is that strong, not only on the 1-hour chart, but on all time frames. So the break of that top is very likely. That's confirming the weekly candle analysis as well. If we put a fib on, we can see that we've had a very shallow retracement so far, basically only bouncing off the 23.6% retracement. I think a bit deeper retracement is likely, maybe to 38.2, around 136.15. It could be the 50 fib, 135.90. Those are levels that I want to keep an eye on. If we do break above right now, because you can see there is already a trend line, we can maybe draw like this. I would be very careful. Personally, I wouldn't want to trade that if it's so close to 137.14. So I'm either looking really for a break of 137.14 and then maybe a consolidation, 1 hour consolidation and break to the upside, or a bigger pullback. If it breaks that trend line, not interested. Personally, probably not interested in anything today with NFP, but if it weren't NFP, then I would not be interested in this trend line break either, because it's just too close to 137.14. Either deeper pullback or a break of 137.14. Nothing else. So that's it regarding the euro dollar. Any questions you want to maybe ask me that you want to otherwise? Oh, Kaylin has a question, in fact. If I would recommend a long at 35.80. 35.80 I think is a good level because it's the 50 fib, isn't it? Yeah, it's the 50, just below the 50 fib, roughly. I like that. I think the bounce at that area is very, very likely. 50 fib is always strong. You can, of course, tackle the entry with different ways. You can put a entry order right at that level, but then your stop loss has to be below the bottom, in fact, because it can also go to the 618 fib, we know. You could put a tighter stop loss below the 618 fib, but it is putting the stop loss in the middle of the playing field, right? So if you take a direct entry order at the fib, well then you need to use the stop loss most likely under the bottom is the safest. If you wait for some price action confirmation, as we know, like a candlestick pattern engulfing twins, you can use the low of that. But then you have to be a bit more aggressive maybe in managing that trade. Let's see, we had a question from Vish. Wait, I just will have to expand the question box so I can see a bit better. Somehow, oh, there it is. I found it again. Okay. Vish is long euro dollar and is asking if he should quit the trade. Well, it depends. It really also depends on the time frames you took the trade and what your target is. In general, we are in a consolidation, and although I think a retracement and continuation to the upside is likely, so if you're targeting for something higher and your stop loss is maybe below the bottom, you can definitely stay in that trade, because although we could make a dip, we should find support. However, with NFP, we are in a consolidation right now. We're quite close to a top. The other way of doing that is taking off the trade, waiting for the retrace to happen, maybe potentially even entering at a lower spot, or re-entering when we do break to the upside. The only problem is that in some cases, let me say it this way, once you exit the trade, it's not always as easy to re-enter, especially if the price goes in your favor and continues higher. So sometimes if you don't, if you exit, it's difficult to re-enter. That's the disadvantage. Then again, if you do manage to re-enter, you've managed to take away some insecurity in this phase with NFP and the fact that we're in a consolidation zone with the potential to retrace a bit, although bounce after that. So difficult. It depends on your parameters as well. Alrighty. No problem at all. So with that said, I think we can move on. Take a look at maybe the ones I wanted to show you. When do you see the question box just so that or do you only see charts? Because I don't want to block the charts with the questions. You only see charts? Okay, cool. Because I have a big question box in the middle, and I was curious if that was blocking the vision. Cool. Yes, indeed, Kalen. Although my other chart really doesn't have much more except maybe the Camarilla we can't look at today, but otherwise definitely like these tools, these basic tools are, the patterns. I think they're the most valuable and give us the most flexibility, right, Kayla, in analyzing the market. Dollar yen, well, dollar yen is not so clear for me in the sense that I would want to see, I know it sounds very high maybe, but a break above 99.50 maybe would confirm the fact that this is the end of a correction. We've been moving up very nicely, and you can see we bounced off more or less the 618 fib. But the question is this a bounce off the 618 fib just one part of the correction for one more correction, like a three-wave ABC? Or is that actually this small downside here, is that it, and we're going up? In fact, 99.50, not the top, but 99.50 would be the confirmation. If we break above 99.50, we know that the move down to 97.50 was a correction, and the correction is finished. So it's quite high. Until then, we always still are in danger of a continuation of the consolidation here, and any move up, we can see resistance at the top, which is at 99 and 99.50. Those two are major resistance levels. So I'm still a bit cautious. It has the potential to move up maybe a bit here, so the dollar yen could be interesting. But the dollar yen is one of those that are heavily influenced by NFP, just like the pound dollar and euro dollar, in fact, as well. Otherwise, there could be some up potential, although we have to be aware of this reversal fib as well because of the danger it could be a zigzag correction to the downside. So I'm more in a waiting mode on the dollar yen at the moment in general. But in the long term, this move up looks very bullish, looking for a correction down to finish the correction of that upside, and then expecting another wave bullish move up. Very bullish, in fact. So let's see if that is true. Could be very interesting later on, maybe this week or next week. Not at the moment, though. Still waiting. Pound dollar. I think the pound dollar, in a way, quite the same as the euro. The pound dollar could have maybe one more move up to break this top or challenge this top. We were pretty close, in fact. The difference, of course, with the pound dollar is just the long-term resistance that it has with regard to this day chart, for example. Oh, and a weekly chart. There's a lot of resistance. If you put it on a weekly chart and would draw a resistance line here, 163, 163.50, 164, 167.50. Those are all heavy resistances. So just like the euro, it has potential to move up a bit still. But if you look at the spaces, it could be quite tight. 162.70 here, top again. But if you look at the short-term time frame, 1 hour 2 has a very strong oscillator reading, 5 waves up, and it's making kind of a bull flag correction. Here too, just like the euro, a continuation, one more push up to break this top, I think is pretty decent. Right? Maybe not as strong as the euro, but pound also showing that it has that potential to continue to the upside. Just be aware of the 163 zone and higher, because that's definitely where price could easily turn. Let's put a fib on this up move. Oh, I wanted to see where the targets are. In fact, well, let's use an extension instead. No problem. That's why we have extensions as well, right? Let's see. I just have to find it because I have normally the fibs on one spot. Expansion right there. make this a bit different color. Let's make it a green. Why not? Yes, and put a fib on here. So here too, could we bounce off the 50 fib? I think 50 fib is always a good bouncing spot. And then the target could be, for example, the 100, right? The fib extension 100 level, which is at, well, it's pretty high in fact. That's at 163.75. Oh wait, it depends. Let's put it at the 50 fib. The 6.8 is at 162.70. And of course, it's higher if we move it up to the 382 fib. So we don't know exactly where we'll stop. We'll have to adjust that. If it's the 618 fib or the 50, you get the point. We'll have to see. Alrighty, so now it's time to add some charts. We can do that by going to this blue, oh no, sorry, this green cross right in here, or plus. And let's add the euro. Well, we can take a look at the euro pound later on. I still have those entry orders there. The euro pound is still just consolidating and hanging up pretty high, right? Still not making that deeper retracement that I'm hoping for to the 50 fib. But primarily I want to first take a look at the odd USD, New Zealand USD, in fact, pound odd. I made some shorts on the pound odd and pound New Zealand on Friday. Closed them out for the weekend though, before the weekend already. This is the Kiwi. There's the odd. Let's start with those two. Daily chart. Well, I don't want to make it too repetitive maybe for people who've been here more often, but everyone knows that we're close to the 50 fib of the entire down move here. Right? So definitely a resistance zone we have to be aware of. And also if we fib this second up move, sorry. I always forget I don't have targets. There is a target there as well of that up move. Well, how's the 4-hour looking? Well, obviously it's nicely trending. Price is above the moving averages, bounced off the 144 EMA, and every time it hooks back to the 34 EMA, it finds support and actually started to accelerate away from the 34 EMA last week, right at the beginning of last week. Right here where I have the cross, 13th of October, accelerated and pulled away from the 34 EMA, dragging the 34 EMA away from the 44, therefore expanding the difference, indicating some bit of an impulse there, right? Pretty aggressive, relatively steeper price action there. So continuation is likely. Let's go to the 1-hour chart. It's a very flat consolidation so far, and we might see continuation to 97 pretty soon. We don't have much space, obviously, to 97, 97.10 to be exact, and we could easily stop at 97, right? We don't have to go exactly to 97.10 before we see maybe a pause at that resistance. So not much space here. Would be not a bad trade though. It's a very likely trade to break this top, and still a good 40 pips maybe. 4-hour chart, engulfing 4-hour candle here. So this level probably won't be broken anymore with this price action signal, although you never know. We could pull up a bit, still find a retrace back maybe to that level, continue this consolidation. We never know exactly when a consolidation is finished, but looking at the 1-hour chart, we do have an idea that that it could be finished now, because if you look at the zero line of the oscillator, we have reached the zero line, right, all the way from the top here. Let me zoom out again. All the way from the top here back to the bottom. And we don't have divergence on the 1 hour chart. That's why a break of this top is very likely. That's why, although I think we'll stop at 97, a break of 97 I think is still quite likely, looking at the power it's making to the upside. If you look at this 4 hour chart, experience tells me that the 50 fib is not going to stop it. The price is going to posit the 97 50 fib, but I think it's going to be a weak consolidation, a weak correction, and we'll see a continuation of that to the next fib, which is the 618 at 99. So that's definitely a trade I'm looking forward to, is that space between 97 and 99. That's, could be very lucrative. Just like we had space, and we were talking about the space between 95, 94.80, and 97. Right? Now the pace could be a little bit less maybe than what we've seen so far. It could maybe weaken in its angle, right? The price action might not have the same impulse as it did from 95 to 97. So just be aware of that it could be a bit choppier to the upside. Alrighty. Other than that, let's see. Would I enter? Well, let's talk about entries. This is the analysis. Would I enter here? Well, about an hour ago, price was a bit lower, and the balance looked a bit different. If this were not an NFP day, I probably would not enter here, because we're right halfway this very tight range between 96.80 and 96.45. As you know me, that would be, I would feel like chasing the market right in here. Personally, let's take a look at the 15-minute world. What I would like to see at least probably is a higher low here, at 96.50 maybe, or 96.47. 50 probably is enough, right? A hook back, as it were. A correction of this up move, because it is a nice impulse. If you look at the 15-minute chart, you can see a couple of, 8 candles, a 15-minute moving nicely to the upside. Good impulse on the 15 and 5-minute world. And if we look at the 5-minute chart, we can see a bit of a pause here. So maybe this can become a bull flag on the 5-minute world to 96.50, 96.50, and then a bounce. That would be, if this is not an FP, once again, something that would still be interest me, a bounce off 96.50 with a stop loss maybe below this 96.43, targeting 97, let's say. So it's 10 pip stop loss, aiming for maybe 40, maybe 15 pip stop loss, aiming for 40, 45, right? That would make sense. Now, even a break above this 15-minute fractal might already signal that continuation in some cases. However, in this case, I would not be interested. It's not a bad break. You can obviously see that it will be breaking this trend line, right? That's the one I'm looking at. But the issue here is a bit maybe the space that could be limited to the upside. First of all, there's 96.75 tops right close by. There's only 10 pips difference between the break of the trend line and the top here. And then we have the bigger 50 fibs. So a pullback here I would find more pleasant. Well, that's, I think, from my side, all about the odd at the moment. Nothing to really add. In my opinion, we can move on. Maybe if you have questions, let me know. Otherwise, we can move on to the Kiwi, the New Zealand USD. It's a bit different. I mean, they're quite similar, but there is one difference here. The fact that we're hooking back, this is what I want to show you, is we're hooking back to this broken top maybe. that was a pretty big level, right? 84.30, the end of that very aggressive impulse to the upside after we bounced off the weekly trend line here at the bottom. We couldn't break this bottom. I remember we were looking at it. Can it break? Will it break? Nope, it didn't. Bounced off the trend line all the way, 700 pip run within 2 weeks probably. Daily candles breaking highs after highs. Then getting a consolidation zone that was decent, pretty big in fact, and then the break to the upside. So we could see a bounce at that level. We do have a resistance at around 87. And around 86. So are we at weekly resistance? Yes, we are. We can put it on a weekly chart, and obviously we are quite close to these tops. Doesn't mean that that necessarily will prevent a bounce in here. No, it could definitely move up to that resistance and then maybe find a bigger retracement. So on a lower time frame, we could still see a small with the trend continuation before that resistance kicks in and might send it for a bigger retracement. But we should be aware that we are approaching longer-term resistance. It's definitely something we want to be aware of. We have divergence between the tops on the 4-hour chart. Right? Look at the oscillator, clearly lower than the top at the 19th of September. All right, but there definitely could be a double divergence. If we do push up and break this top at 85.20, the likelihood of a double divergence on the 4-hour chart is higher, adding another reason why once we do move to the upside, we will get a bigger retracement. In the meantime, this 84.30 top could be the bouncing spot, and if we zoom in a lot like this, we can see that price is respecting the 34 EMA, finding a base here, maybe with a smaller engulfing twins, and retracing those twins. So if this were a normal day, I would like this retracement of these engulfing twins right near this 84.30 level. That would be very interesting. Still, although it's an interesting price action signal, the candles, the 4-hour candles themselves are quite smallish, not really adding a lot of confirmation and benefit to those in that analysis, because smaller candles, of course, not really having the same effect if you have clear, bigger candles that are more decisive in their character. Right? So we want to be careful with that as well. The 1-hour chart is showing the retracement back to the 144 EMA, which definitely could be a bouncing spot. Here too, the oscillator has reached the 0 line. And the 15-minute chart moving down pretty aggressively. Could be a hook back for more upside though. One way of measuring, instead of maybe speculating on the fact that we can turn here, waiting for a bit more confirmation is another way of tackling this. And for example, we're having lower lows and lower highs in the 1-hour chart. Waiting for a higher high. We have a higher low. We don't have a higher high on this 1-hour chart. Is another way of being a bit more patient, right? Because although 84.30 is a good level to bounce off, doesn't necessarily have to do that. So waiting for the 1-hour higher high would give us that confirmation, more of a confirmation than maybe a small 4-hour engulfing twin, which is very small, right? We don't have that here on the 1-hour chart, a higher high as yet. Probably we can see, if we zoom in, we can see a bearish candle right now. So one more hour next to this hour, we would have a fractal right at the top of last hour's candle, if you follow me. This 84.58 would become a fractal, and a break of that would be the first higher high on the 1 hour chart. Stop loss could be below, or advisable to be put below this fractal low, 84 below 84.37, and that would be the confirmation. One way of trading a confirmation, right? So I'm going to take a sip of water, and then we'll take a look at the pound odd and euro odd. I find those interesting. But if you have something, by the way, that you want to take a look at, maybe whatever it is, I don't know, let me know. I drank a bit too much coffee, so I'm getting very thirsty. I needed that coffee because yesterday I got up at 2 a.m. I'm used to getting up early, but even for me that was on the early side. Jano is asking about precious metals. I do keep track. I don't trade it, but more sometimes, but really not that much. But I do keep an eye on gold and silver, and once in a while oil, but that's really more occasionally. But we can take a look at gold and silver, no problem. We'll also take a look at a bit of valued wave because Kaylin is asking about that, and I love the topic, and I'll show you where you can find wave analysis as well, by the way. Well, I can do that right now, in fact, if you don't mind. Let's see. Let's go to the Admiral Markets website. So you know where education is, right? And where to find webinars, just in case you are new in here, go to education, admiralmarkets.com, education, go to webinars, and you can see the sign up button for all of the webinars this week and next week probably as well. And you can also go to analytics, go to fundamental analysis, technical analysis, or wave analysis. And wave analysis, you will see my count on the euro dollar, pound dollar, and dollar yen. Now, one thing you should know is that in some cases, the wave analysis gives me or provides me more guidance than in other cases. Now, every day I will show you what I think is most likely, but if you ever wondered what I think is the very strong probability, just ask me, because in some days everything is just a bit more clear for me or for other wave analysts than other days, because in some cases the probability based on experience and knowledge just is more clearer than others. Although in most days I always have an idea what it is most likely is, but one day it's just not the other. It's not the same as the other. One day it could be an 80% probability, the other day it could be 60, the other day it could be 90. That always varies, and that's the thing with wave analysis, is that maybe discourages traders from using it because of these varying probabilities in using it. But it's just like a chart pattern. Sometimes you have a chart pattern on the chart. If you see it, you use it. If you don't see it, you don't use it. The same is for, in my opinion, the waves. In some cases I use it, in some cases I don't. So that maybe answers your question as well, Gary, is that yes, I do use it, but it's not something I always use. Definitely not. Definitely not. Just like chart patterns, I occasionally use, or Gartley patterns I use when they're clearer or useful and visible to me with high probabilities. All right. Otherwise, it's something that is not in the foreground of my decision-making process. Like the dollar yen, for example. When the dollar yen was making Let's see. Let me show you this one. When the dollar yen was making here on the left 1 2 1 2s, here you can see the pink 2 I think here. When it was making those 1 2s 1 2s, that really helped me to expect this continuation up, for example. All right. And when it got into this consolidation zone, I knew that we could have a lot of ups and downs with some mild pushes to the upside. So that helped me there. But maybe, for example, with the euro dollar, I was less sure. Let's take a look at the euro dollar. Here, we were making 5 waves. I still gave preference to a corrective count to the downside. Although I know a lot of Elliott waivers that were saying, or wave analysts that were saying already, counting this as a impulsive 1, 2, 3, 4, 5 to the downside. I did mention it, like it could be that. I still marked it myself as a ABC. That is just based on my experience that on the 4-hour chart, I was still cautious of this upside potential. That's why I still marked it ABC. But it was less, let me say it this way, it was less clear until we broke out of the purple line here, when we broke above this orange B. So that's an example where I was more on the defensive and not, the things were not as clear. Was this a correction or was this actually a bigger reversal to the downside? Alrighty, back to our charts though. Right in here. Okay, then I'll talk a bit more about it in a second. I don't want to lose too many people's attention though in the meantime, just in case they're not that into wave analysis. And I want to show you this pound out, and then we'll maybe continue a bit with that again. Alrighty. Pound odd, where do we start? Well, maybe even the weekly. I know that's a very high time frame, but if you look at this very impulsive move up, which is actually correcting the downside, isn't it? That was a very strong upside, right? Higher highs, higher lows. But more importantly, we broke this bottom. And we couldn't break the top. For those of you who were at the seminar and know a bit more about time factor, we didn't break this top for 5 weeks, right? Look at the weekly candles, 1, 2, 3, 4, 5. And I'm not sure, I think I told it in this room, probably I did that. 5 weeks couldn't break this top. A reversal is definitely becoming more likely. This impulse to the upside could be over. And we did get the reversal off of this top right in here, very close. I mean, if you took a short in here based on that, you're doing very, very, very well, right? So we got the reversal. We even broke through the weekly support, which was still very important because we could bounce off that support to make a range. We're not doing that. And we can move down to test 382. So we got a lot of space to the downside still. Daily chart, the 382 is all the way at 163. Could have 400 pips to that. Four-hour chart, very nice downtrend. Look at that price, very nicely under the 34 EMA. Continuing its lower lows, lower highs. 1 hour chart, though, has a lot of divergence, multiple divergences between the bottom. So maybe a bigger retrace, for example, on the 1 hour chart, and I talk about bigger, I'm not talking about, it doesn't have to be that major, it could go back to test these tops right in here, where I have the red line now. That is possible, right? Something we should be aware of. Otherwise, it's definitely looking like a triangle, and we broke that triangle. So maybe one more move down is possible. We just have to be very careful and realistic with the take profit. That's all. And it has everything to do with these double, triple or quadruple divergences on the 1 hour chart. All right, you can see here too, once we broke where I have the crosshair here, we broke that bottom with this bottom here, where I have the vertical line. You see that? We broke the bottom just a bit and then retraced. Well, that's something that could happen here easily as well. Don't expect too much from the bottom break because of the divergence. And we could retrace just like we did after this red vertical line. So how much did we break that bottom? 30 pips. So there could be maybe 40, 50 pips downside here. Eventually, we should see some retracement. The 4 hour chart actually never reached the zero line. It just made a very, very strong move down here, where I'll have I'll move the vertical line to here. You see that? There's the bottom of the 4 hour AO. And it kept breaking that bottom again and again. But this is in fact bad divergence. Not proper divergence. Does anyone know why? Why is this bad divergence on the 4 hour chart? Bonus points for the fastest. Good answer. So we're looking at the red vertical line there. And after that, we see divergence between the bottoms. We're making new lows. Yes, Gary has the right answer. Well, just nice try. It's true that we don't have a lower high. No, lower high. We don't have a lower low on the oscillator. We have higher lows here. But indeed, the awesome oscillator didn't go to the zero line, which means it's still bad divergence, not proper. It is proper on the 1 hour chart. So even if we retrace on the 1 hour chart, one more downside on the 4 hour chart is likely to get divergence on the 4 hour chart, and then we could see a bigger retracement. So down, up, down, up. I wish I could draw it on the chart, so I'm limited here in my explanations, but let me do it this way otherwise. Wait, I know what to do. Down, up, down, up is and let me take these off so to avoid all confusion, is the path of least resistance. And then maybe like this. This is at the moment. Now, of course, every time there's new price information coming on board, obviously I'm going to adjust it. I'm not going to stick to this forever just because I want to. Obviously, we're going to incorporate a new price action, but at this moment, that would seem the most likely to me. Let's see. I can leave it on the chart for the fun of it. We can take a look. Alrighty. Anyhow, back to 50-minute chart. Ah, cool, Vish. Let me try to, I got some drawing tool from Vish. Try to copy that link. Can't get to that link somehow. Let's see. Ah, thanks. Yeah, that's better, Vish. Thank you. Ooh, awesome. Thank you, Vish. Look at that. Ooh, very nice. Oh. Ah, now I deleted it somehow. Hmm. Not sure where it went to. Sorry. That's funny. Anyhow, um, maybe I'll open it again. There it is. Okay. Anyhow, I got it open again. The 50-minute world. So we are in a bit of a dangerous territory, maybe, right? As we know with the divergence. It's quite choppy. This is where I was shorting it. In fact, on Friday, I was shorting it upon the break here. Right in here. And also in here on the retracements for, I think, and I closed it somewhere in here. No, here, sorry. There. Because it was getting close to the end of Friday and didn't want to live through the weekend. And yeah, I was going on a trip, as you know, so to Lithuania. In any case, yes, it was Meredith, indeed. Yeah, that's correct. That place, indeed. So looking at the 15, we are getting a break, and that's why it was interesting. You can see the triangle a lot better here. It's a nice break. And in fact, I would have loved to see a retest of that triangle. That would have been really perfect. Doesn't look like we're pushing there as yet. We could still bounce off this bottom, right? At 166.86 maybe. Not sure if that's very likely. Let's take a look at the 5-minute chart. Could be. We could maybe see a bounce here to retest that trend line. Usually speaking, that would be good. Hook back. But we're not sure. Let me open that drawing tool again. We're not sure if we can if we can move up to there. It could just continue down like that. So one way of doing that, I just fortunately always somehow delete the entire drawing tool. I don't want to do that, but one way of doing that is going to the 15 or 5-minute. If we do break below this bottom, that could indicate the continuation. All right. So the drawing tool was acting a bit funny. But as you know, the volatility, the likelihood of moves happening now is a lot smaller. That would be normally the case, just hook back. With NFP, we have to realize that the whole mentality of the market is different. If you're a big trader and you're trading with huge amount of money and you're trading with a lot of investors, you have a boss to deal with, most likely you're not trading now and you're waiting for NFP. And then either depending on how you trade, you're trading NFP or you're trading tomorrow, because the likelihood of a breakout or some sustainable move that has a direction to it is just very small. The likelihood of price bouncing back and forth for the next few hours, just waiting for the news event to happen, is very high. And it's very likely. And the psychology of the market is in waiting mode. That's life. Nothing we can do about that. So when I'm talking about these things, I'm talking about if there were not NFP, how you could tackle it. Because with NFP here, we can get a hook back to the triangle, and it really doesn't mean anything. It's not, these patterns are not that trustable anymore in today's environment. I wouldn't say that there's a particular edge by using any of these technical analysis tools right now, because it's just it's a choppy consolidation environment. And Louis Shea agrees, indeed. Indeed. So that's what we have to be aware of. But we can take a look at the market on Thursday. Unfortunately, not tomorrow, so we cannot look at what happened with NFP. Will it be a volatile NFP? Could be, with the budget deals. Last time, I didn't expect much move with the NFP because we had a very eventful NFP prior to that. Maybe with the budget deals now being at least pushed forward another few months, we'll see what happens then, but could be a bit more likely. So now that the market is quiet anyhow, maybe you would like to look a bit of wave analysis for the last 15 minutes, and I'll show Kaylin a bit of wave analysis, and maybe you'll find it interesting to take a look as well. Kaylin, do you have any specific? Let me take a look at Kaylin's question here first of all. I think it was a general question, but if I can find it. 1 second. Oh, okay. No, there was no, yeah, this is a general question. Oh, okay, how to identify waves. Great question. Well, the first thing that we should know is, in fact, the basic premise is the impulse and correction. So, in fact, just looking at that already is very useful, because that would give us a guidance on what we can have a bit of expectation, what we can see in the future. Using impulse and correction as a standalone tool will already help us a lot, I think. You don't even really have to dive into waves or count waves. If you just look at that will already help your trading. And that's not too difficult, I think. If you look at the 4-hour chart on this pound odd, and you look at this, let me put vertical lines. Look at the candles between these two vertical lines. That's an impulse. Because price, the candles, the lows are every time cutting and making lower lows, and the highs are usually lower as well in most cases, right? So that's just an ongoing move where price is moving in one direction in the majority of the time. Simple, right? Most of the downside candles are big, The upside candles are smallish. If there are any, there shouldn't be too many, and there aren't. So it's a very one-directional move. The lows of the candle are very close. The closes of the candle are very close to the low, indicating all one direction. So what are, once again, just to summarize, what are the characteristics of an impulse? The closes are near the lower high. The candles to the trend are bigger, right? So in this case, the downtrend, the down candles are bigger, smaller candles to the upside. And we see of course, most of the candles are with the trend. So in this case, most of the candles are bearish. That's an impulse. What is a correction? It's a mixture of ups and downs. The candles are not necessarily showing any direction. The upside and the downside are mixed. The candles are smallish, etc. That's a correction. It's a consolidation. What would be an example of that? Maybe this zone right in here, right? That's a correction. You can see what is it? A lot of dojis in there. Some bullish, some bearish, moving up and down, etc. Now, if you can recognize that, and we mix in a bit of a time factor to it, because once you know that from me, that if we don't break the low or high within 5 candles, that we will probably see retracement, reversal, or consolidation. At least the impulse is over. So that's how we know. We can know the impulse is over by using time factor. Of course, also identifying major levels is important as well. And then we have a potential reversal, retracement, or consolidation. The consolidation is over typically when we break out, right? That's why we have breakouts. And but sometimes the first breakout can turn into a false breakout. That is always the risk we run with breakouts, but the second breakout is usually more sustainable. If we do break out the second time, the likelihood of that becoming a false breakout is a lot smaller. So that's impulse and consolidation. Once you know that, that will help your trading, I think, a lot. But wave analysis just takes things one step further. And in fact, all it does is it connects these impulses and corrections with each other. That's basically it. It's maybe seems more complicated, complex in some cases, but all it does is it pieces these impulses and corrections together and says, okay, this was that, this is that. So if we tie these, if we place these pieces of the puzzle together, then most likely the next move is going to be a correction or impulse, or it's going to do that or that. So it ties impulse, impulse, correction, 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 impulse all together and says, okay, this is the story of all those moves. And usually when these events happen, the next one, there's a probability that the next one is going to be this. It's most likely never 100%, but say 80% chance that the next one is going to be an impulse to the downside. So that's what wave analysis does, in fact. It connects these impulses and corrections to make a story, to make an ongoing explanation. So instead of saying, okay, we're in an impulse right now, and we know that the impulse is probably stopping, or we know that we're in a consolidation and we're breaking out of that, it takes the analysis one step higher and says, okay, let's take a look at the entire market structure and say impulse, correction, impulse, correction, impulse. So if you follow me along, impulse, correction, impulse, correction, impulse. What is that? A typical 5-wave structure, right? A 1, 2, 3, 4, 5. What is a 5-wave structure is actually what I just said. Impulse, correction, impulse, correction, impulse. So when you see that, what could you expect after that? The wave analysis would say, okay, there is a chance that we could get a correction of those 5 waves in a 3-wave pattern, which is the basic premise of the wave analysis, and say we can expect an A, B, C, which most likely, or in some cases, could be an impulse, correction, impulse. Now, how do you identify that? Well, first of all, you can look at impulse correction to have an idea of the count. But you can also take a look at the oscillator, because the oscillator should give us the confirmation of that count. And I think that's the vital tip and trick I would want to give along. I think that is a pretty good kind of benefit. That gives the extra confidence, I think, in judging what the count is, because some analysts only look at price action, don't use the oscillator. But I think that using the oscillator gives a lot more guidance. And the tip and trick is basically quite simple. Just go to any time frame, and if you're looking for a particular, let's take a look at this 1-hour chart. When you're looking at a wave count, alrighty. This down move here, wait, let me move these. Okay, the move down where I have these vertical lines. You see that has the awesome oscillator reading about here, right? Up to the red line, the horizontal line there. So what we see typically here is, if you would zoom into that area on the 50-minute chart, let's do that, 1 second. This is the 1st of October. What you even want to look for on a smaller time frame, you can see a typical 5 wave, can't you? The first wave, a deep wave 2, a very strong wave 3 with a very strong oscillator reading, a wave 4 correction, and a wave 5 breaking the wave 3 bottom and getting divergence. That's a typical pattern for all impulses. Wave 1, moderate oscillator reading. Wave 3, a very strong oscillator reading. And the wave 5, weaker, creating divergence between wave 3 and 5. Because there's divergence, you will see a pullback after that, which obviously gives a correction on the higher time frame. So this is how you can get that extra confirmation. All right, wave 3 will have a strong impulse, a strong oscillator reading. Wave 1 will have moderate. Wave 5 will have lower than wave 3, creating that divergence. And then you'll see the correction. This 5 wave, so what do we have here? Impulse, correction, impulse, correction, impulse, making a 1, 2, 3, 4, 5 on the 1 hour, 15-minute chart. This 5-wave structure could be a wave 1 on the 1-hour chart, and this up move could be a wave 2. And if we look at the 1-hour chart, it is so. On the 1-hour chart, however, that entire down move, although we saw the oscillator return to the 0 line on the 15-minute world, right? Because if you look at this 15-minute 5 move down, what do you see? The waves 2 and 4, the oscillator is returning back to that 0 line. Do you see that? Let me put the red vertical line right there. Back to the 0 line. Back to the 0 line. In both cases, the correctional wave has moved back to the 0 line. That's why I'm always saying that proper divergence is only valid when the oscillator goes back to the 0 line. That's when you know when a structure, when a move is finished. Because how do you know when an impulse or consolidation is finished? Besides the time factor, in fact, I forgot to mention, is that when the correction has moved the oscillator back to the 0 line. When this wave 3 on the 50-minute chart finished here at the bottom, we have the crosshair, we got a wave 4 correction. The wave 4 was confirmed when the oscillator hit the zero line, and we knew that that down move was an impulse that has finished. That's it. That leg, that wave is finished. We had a wave 1 down, we had a wave 2 up, we had a wave 3 down. That's confirmed. We had a wave 4 most likely, and a wave 5. So when the wave 2 and 4, the oscillator is back to the zero line, the retracement has fulfilled its minimum requirement. So that's another thing to look at. So when piecing together these impulses and corrections, what do we see here? A wave 1, right? Because the move down on the 1 hour oscillator is just one move down. So this is all one leg. So of course, what are 5 waves on the 50-minute chart with ups and downs and moves back to the oscillator and away from the oscillator. In fact, on the 1 hour chart, because we use multiple time frame analysis, we can see it's just one move down on the 1 hour chart. What that is? Probably a wave A or 1, because we know there are 5 waves on the 15-minute chart. That could be either a wave A or a wave 1, and that depends on the higher time frames as well. So that we would have to maybe zoom out to the 4-hour chart, day chart to see what that could be. So you do have to use multiple time frame analysis. So if we know this is wave 1 or A, we know that this hook back to resistance is most likely going to find rejection. We can see that wave 2 or B has met the minimum requirement by going back to the oscillator at this red line, this vertical red line right there. And once we, for example, hit the fib or go below this support line on the 1 hour chart, which is the 1 hour support fractal, we know that this could be a wave C or 3 and could move down pretty fast. And when we get a sustainable long move like that, where the oscillator is breaking wave 1, right? Look at that. Then we know that this is as it should be, a strong move up, and we see that the oscillator is confirming that. Now it depends on your higher time frame analysis whether the move down here is finished, where I have the red vertical line there, because this could be in theory an ABC. It could be a zigzag, or it could be a 1, 2, 3. That's something you would have to decide on higher time frames. If it is a 1, 2, 3, then once the oscillator returns back to the zero line, we know that the minimum requirement or retracement, retracement requirement has been met for wave 4, and we see that that is the case. And one more downside is likely to break the wave 3 bottom. And I'll put a line at the wave 3 bottom right there, the red line there. That is the wave 3 bottom. A break of that bottom is likely to create divergence between these bottoms. That's the minimum. But as you can see, not the maximum, because what did we have on the pound odd? We had one bottom break. That was a very high chance, very, very high chance, right? Depending, though, you always have to check the higher time frame analysis. But we even got a second bottom break and a third bottom break. But that's why I did warn you for triple divergence on the 1 hour chart, which increases the likelihood of a bigger retrace at one point or another. Why is that happening? Because there are some extensions going on, which always can happen. That's why you want to be flexible with your wave count and always realize that extensions are possible with a strong trend. So what does that look like on the 4 hour chart? Well, let's piece that together on the 4 hour chart. We know that this down move here was wave 1 on the 15 and 1 hour chart, right? This was wave 2, where I have the second vertical line. and look at wave 3. In fact, wave 3 is maybe still going on in the 4-hour chart. We see that this entire down move belongs to each other on the 4-hour chart. So we still probably have a wave 4 and a wave 5 left for this pound odd to the downside. So by piecing these impulses and corrections, you can, and looking at support and resistance and key levels and time factor, you can try to piece that together. There's, not always, there's definitely not, never 100% guarantee probably. There are some cases a higher likelihood where the analysis is definitely pointing strong probability of a count being correct. And using the oscillator is definitely one of my primary methods, together of course with looking at waves on the lower time frame to count if there's a 5-wave structure, and also looking at the angle of price action, because if you look at price action moving aggressively like that, that's an impulse, and piecing together impulses and corrections. Let's look at this upside here on the 4-hour chart. You can see, or maybe the day chart, I don't know exactly what to show you is the best, but here, for example, you can see this was an impulse on the day chart between here and here. That could have been a wave 3 or A. Not sure, we have to analyze it from scratch, but when we turn to the 0 line here, you can see we got one more push up to create that divergence between the tops. Let me see, quickly on the week chart. Well, this could be a wave 3. This could be wave 1, could be here. Let me show you. 1 could be maybe here or here. We would have to zoom into lower time frames to understand that structure better, because we can't see it here. This could be wave 2. This could be wave 3, and we're in a wave 4 now. It's possible. That's why I do have a fib on this entire up move, and that's why I'm saying be careful of the 382 fib at 163, because it could be a bouncing spot. Wave 4 tend to bounce off the 382, so we have space down to the 382, which could become a bouncing spot to move up again to break this current top and create a 1, 2, 3, 4, 5 structure. So that is possible. So I guess we can continue next time. I'm going to have to wrap it up probably right now. Does this make sense to you, Caleb? I know it's something you want to test yourself to gain confidence in using this, but yes, waves 2 and 4 will have a downside of the oscillator to the 0 line. Waves, if, for example, in this case, we have the daily chart, and the oscillator to the downside is very strong, the wave 1 will not even reach the opposite side. So in that case, you might not have it. That sometimes happens on higher time frames. But on lower time frames, you should have wave 1 and 2 that have that indeed. So to give a bit of a summary here, basically start with impulses and corrections. Try to understand that structure. Once you have a feeling of understanding what is impulse, what is correctives, you can start to look at the current moves. Then slowly but surely try to piece them together and say, okay, this is an impulse, this is a correction, this is an impulse. And look at the awesome oscillator. What is the oscillator saying to you? Is the move very strong? Is it weak? That's the next step. Is the move back to the 0 line? Once you have that, then start to look at multiple time frames. Once you do that, then you look at of course key resistance and supports. Always do that. And then there's the more complicated matter of trying to say, okay, this impulse, this correction, and this impulse, looking at the oscillator and looking at multiple time frames, and the structure is probably a 1, 2, 3. And it's on a 50-minute chart, it's a 5-wave structure, making a wave 1 or 4, wave 1 or A on the 4-hour chart. Okay, that's the very last step then. I hope that this kind of like step-by-step approach will help you there. It was a very fast explanation, of course, so don't get discouraged if you are find it a bit difficult. Kalen is saying if there's a chance for 1, 2, 3, 4, 5 after 1, 2, 3, 4, 5. Yes, there is. Because why? Because of the higher time frame. A 1, 2, 3, 4, 5 could be a wave C, in fact, of a higher time frame, and then it could be, for example, on the 50-minute chart, you can have 3 waves down, ending a correction to the downside. In a 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, finishing that correction, and then the 4-hour chart can continue with its uptrend. So yes, Kalen, indeed. That is possible without ABC because it's making a bigger ABC. That 1, 2, 3, 4, 5 is actually finishing the C on a higher time frame. Yes, it would be on the same time frame. It would be a 1, 2, 3, 4, 5, and then a 1, 2, 3, 4, 5. It's possible. Normally, after wave 5, can we automatically expect a 5-wave reversal? No. Excuse me, because depending on the higher time frame, actually after a 5-wave, what you could expect is a typical ABC, a 3-wave correction, right? You could get a 5-wave structure if the 5 waves you think is ending a correction. Other than that, if you see a 5-wave structure, there is a chance that that could be finished, but look at the pound odd. It just keeps on extending. Right? Look at this 1 hour. We had 5 waves already finished here, but it kept going. So always be careful, especially on lower time frames. It could keep pushing. Literature regarding waves. Well, you know, the standard Elliott wave book from Proctor, no. What's it called? Elliott wave. I forgot the name. I'm horrible on names. Let me look it up. Elliott wave principle. Is that the book? The name of the book? No, that's. Wait 1 second. I'll look it up. Well, ElliottWave.com, I mean, I have no ties with them, but they are the Robert Proctor's Elliott Wave. He wrote a book about that in the 70s. Ah, Garrett has Frost and Proctor. Thank you. ABC can be determined through the oscillator. Yeah, well, it's 2 things. One thing is the oscillator, because if the third wave is not breaking the first wave, well, then it's an ABC, because the third wave should always be the strongest on the oscillator. Wave 3 cannot be weaker than the first wave, otherwise it's an ABC. And that's the advantage of using the oscillator. I don't think this is something that is different than other wave analysis. I mean, I think, will give you that extra confidence, as it does with me, once you get more experience in it. The other thing is looking at how far the third wave will go in price, because if it has the same length as the first wave, then usually wave A equals C. That is another confirmation that's probably an ABC. If it's a wave 3, it should extend further. So it should really be longer than the first wave. Then you know that the likelihood of a wave 1, 2, 3 is higher. So price should extend further, and the oscillator should break the first wave, and then the likelihood of 1, 2, 3 is higher. If they're equal to each other, then it's more likely that it's ABC. Those two things. At the top of my head, let me see if there's anything else. Yeah, if price doesn't break the bottom of the first wave, well, obviously it's a correction, right? If price doesn't break the bottom or top, then obviously it's a flat, it's a correction. If it does break the bottom, it's either 1, 2, 3 or ABC, and if it is ABC, it's a zigzag or a expanding flat. But now we're getting into a bit technical, a bit into details. So how can you trade it? Yes, definitely. If you see a 5-wave structure on a short time frame, if you're looking at a support level, look at the euro pound. I see a big bounce off a support level. I see a 5-wave up on the lower time frames. That's why I'm looking for an ABC back, and I want to enter at the 50 fib for a very strong up move. And it has everything to do with that. And entering long, that's what I'm trying to do, entering long at a wave 2. Very, very good. Other thing you can do is enter upon the break of the top of wave 1 for the continuation of wave 3, or trade part of wave 1 by zooming in and trading the wave 3 of wave 1 and the wave 5 of wave 1, or trading the wave 5 of wave 3, or trading the wave 3 of wave 3, or trading the wave 5. Yes, those are all places that make sense. But then you would have to do some multiple time frame analysis. You could take reversal trades at the end of wave 5, but those are always more risky. Typically, if you do see the wave C of an ABC is a bit less risky than trying to catch the wave A. Yeah, I know it's very fast, maybe all of it, but we can go through it once more, no problem. Maybe even do it, at a webinar on this. I think Kaylin is still. Are you still typing a question, Kaylin? Entries, yes. Well, basically, what you're looking at is, if you're looking at this pound odd, the entry methodology is always the same in the sense that you can use confirmation, breakouts, or directly flip for a deep pullback. You can take the direct entry at the pullback, or wait for some confirmation, candlestick pattern, or wait for a fractal break to take that to the downside. So it could be a trade right in here, right? And maybe you can take an extra trade when you see a breakout somewhere in here or here, for example, because then you know that the currency is moving your way, right? And maybe you can take an extra if you think this is a wave 3, somewhere in here, another breakout. Right? The other entry could be upon the wave 4, trying to catch the wave 4. Well, we didn't reach the 382, but trying to catch the wave 5 by either trading the 382 fib, which we didn't get in this case, or trading this breakouts. Typically with wave 4, breakouts are better, and wave 2's Fibonacci retracements are pretty good, because why? Waves 2 are pretty deep. You can see that it was a very deep move. So in that case, our stop loss is pretty small, and we have a pretty good R2R expectations because of that downside, right? Wave 4s don't go deep, so the stop loss is bigger, right? You could put a stop loss above the 50 or 618 if you do expect a wave 4, by the way, or the origin of wave 1, which is where I'll put the green line here, right? You could put the stop loss above there if you wanted to. If you wanted to take the 382 fib, or wait for breakouts. And of course, if you are in a wave 3, you can zoom into the 15-minute chart and try to trade that downside here between those two red vertical lines. So that's a very fast explanation of that. You can also vary your risk depending on the wave count, right? I mean, typically you might want to put maybe a smaller position on the very first entry. See if it goes. If it does, maybe a bit smaller one on the next breakout. A bit big, maybe a bit bigger one on the breakout here, or next confirmation. Let me say it this way: when we break, for example, this 1 hour fraction line, you can scale in a position like that, and you can close some when you break this bottom, or when you reach this bottom, and maybe the next one. Well, I guess we'll wrap it up then. Ken, if you have any other questions, please feel free to ask me on Thursday, okay? Otherwise, I guess I have to head off, in fact, to Kaunas, where the seminar is going to be. And so we'll need to wrap it up now. But I hope that made sense. I know sometimes it's, I mean, it's not going to be automatic, this wave counting, but if you, I think, definitely first start with the impulse correction part of it. That will already be a good benefit, I think. And take it from there step by step, using multiple time frames and the oscillator, and then just, you know, gain that experience as you go. Thank you, Gary, and thank you, Kaylin. Glad that you found that useful. Very happy about that. And once again, we can always look back at it again, right? Yep. Thank you, Vish. Great. It's great being here in Lithuania. It's my first time. Very nice city. I was in the downtown yesterday after the seminar for a bit. Looks very nice. So I'm looking forward to see a bit more today. Oh, very nice. Be there tonight. That's great. So thanks to everyone for being here, and talk to you all soon. Cheers.
The organizer has ended